Good morning, everyone, and hope you all are having a great week. So many of you know me, but for those who don't, my name is Li San. I'm a partner at Foundation Capital, focusing on frontier tech investments. So I'll be moderating today's robotics panel. As I mentioned in the invitations, we have invited two amazing leaders in robotics, Helen and Raf here, to share with us their insights on how to build a successful robotics company. So I'm sure many of you already know who they are, but just in case a few of you don't, so let me just do a quick intro. So Helen is one of the co-founders of the public home robotic company, IRobot. If this doesn't ring a bell, so that's the company that makes your Zumba, and I have one. So Helen is now the CEO of Churchill, a company that basically makes garden waiting robots. And Raf is one of the co-founders of Kiva, the Kiva Systems, basically the autonomous guiding vehicle company that was acquired by Amazon, and for close to $800 million. And now it's basically became Amazon Robotics. Before Kiva, Raf was a professor at Cornell, and he was in the US before. And he basically started Kiva while he was on sabbatical at MIT. And so, MIT is also happens to be, mine and Helen's alma mater. And Raf is currently a professor of dynamic systems and control at ETH Zurich. And like Helen, he's also working on his new company. So it's called Verity, which designs drones that can operate indoors. So Helen and Raf, thanks again for being here with us.
And nice to be here.
Thank you for inviting us.
Thank you. Especially considering the pandemic and also the time of the year. It's near the holidays. We really appreciate it. So our audience here today mostly consists of founders and CXOs of early stage robotic startups. And the majority are first time founders. And so basically they're all eager to hear our insights. And then they have sent in their list of questions beforehand. And so that's the list I've already shared with you. And so if you don't mind, I will go through that list first today.
Cool.
Yeah, and later I will leave 10 minutes at the end to get new questions from the audience. So sounds good?
Sounds good.
Yeah.
Perfect, thank you.
Great. So let's now start with the first question. So automation has been widely recognized as a driving force, for the future, and especially in the current COVID environment where people cannot go to work. But for decades, despite the need for automation and a plethora of robotic startups, very few have made it to be very successful. Of course, except IRobot and Kiva. So what do you think are the main reasons behind this? Both in the consumer space and in the industrial robotics space. And Helen, you want to go first?
Okay, well, in the consumer space, I think it was because we asked the question that the focus group people asked, what is it going to do for me and how much is it going to cost? It's really the value it's create and the cost you can buy it for. And there's a lot of great technologies, but they come in at a high price point. And there's also, some things that doesn't quite fulfill a need. I think just getting into this utilitarian track, and we did that because we had some experience with the toy industry. And we didn't like it, right? Because, you can get a lot of buzz, you can get a lot of excitement. But when we looked at what happens, it's like over the few years, then it's like that's gone and you have to have a whole new type of product. But a utilitarian robot, it's just a better way to do the job.
Got it, Rob?
I would say that I would put robotics startups in three categories. There's military, there's B2B, and there's consumer. I'm sure there's other ways to slice it. And the easiest is military and the hardest is consumer, right? Hitting a consumer home run is really hard. What iRobot did with the Roomba is, it was a huge home run. It was the low-hanging fruit that everybody goes, geez, why didn't we think of that? That's a definition of a home run. That's the hardest. I think B2B is a little bit less harder because you can, it's easy you don't have to do focus groups. You can really, here's the problem, here's the value we can create, right? So, that's the other side of it. And the military is the easiest because of this price point. Why are there so few? It's really hard to do a robotics company. It's not a software company, it's not a hardware company, it's a systems company. It has communications, it has security, it has hardware, it has software. It has all the pieces in it. And especially when you do things where you have multiple robots, the cost of the system when it doesn't work completely breaks the economics down. So you have to make something that works all the time, and that's just really hard to do.
Got it. Actually, then that comes to the next question. So basically, in the early days, when you started, IRobot and Kiva, so what were the main challenges and that you have faced in the journey, and also how did you overcome that?
Oh, wow. Well, at IRobot, we started without the business arm. We were 9 years in before we started developing the Roomba, and we did a lot of different robots. So it was always what we considered great opportunities. We did robots for down in oil wells. We did robots for the military. We did robots for the toy industry. We did robots for large scale cleaning and all different kinds of robots. But all of it gave us the experiences that we needed to pull it off. The experiences making products, the experiences with intellectual property, and it gave us a base of people at the company which were, second to none. We had trouble, of course, raising capital because we were, a robot company, and I'd get feedback like, to science fiction, or I would do it, but my partners would kill me. Helpful stuff like that. But many of those VCs came back to me later and said we were wrong. We should have invested in IRobot. We also, we did have trouble getting to that first, real success. We actually had two successes at the same time in the military, as Ralph said, but also in the consumer, and they happened at exactly the same time. If one had come before the other, then I think we would have been pushed towards that one. But 2002, we launched the Roomba, and we had our military robots deployed in Afghanistan, and the bomb disposal was such a big need that the military had, that stuff that was in the research lab or would have stayed in the research lab started being used in the field very, very rapidly. So we, in some respects, we were able to raise money. I never raised money for the Roomba before we had it on the market. We tried, we wasn't going to succeed. So we basically tuned the pitch towards industrial and military.
That's awesome.
Got it. Yeah, Ralph?
Challenges, I would say there were three, and how does that relate to today? So the challenges were, yes, investment, clients, and just creating the technology, right? All of those, you need all of them. They're not one is more important than the other. They're all necessary conditions if you don't have them.
Yeah.
What's changed now is investors much more receptive. To Helen's point, the original name of Kiva was Distrobot, for distribution robotics. We changed it because of investors and because of clients. Like, they didn't want to hear a word robot in a company that's supposed to solve a problem. They don't want science fiction, right? So we changed the name. That's completely different now, right? Having the word robot is a huge plus. It wasn't back then. So that's changed. Making the technology robust and reliable, that problem is the same now as it was then. It's a necessary condition. I think what's different for robotics companies now is it's easier to get money, but you have a lot more competition.
Totally. Yeah, so basically, actually, my next question is actually regarding competition. So first of all, Helen, so of course, IRobot is a great success. But then in terms of making, kind of a vacuum robots, you see like lots of, basic competition that comes into the market. So, especially for anything, consumer, right? So there's always lots of competition because everyone sees it. Yeah. So in that case, how did the team basically fend off competition and then grow rapidly after that?
We were actually expecting more good quality competition earlier, right? Yeah. Once we put it out there, once we got all the mind share, I remember I was at a conference in Korea. It must have been like 2004, and there were these large companies like Samsung and small companies like Eugen, and they had exact copies, and they were so nice to me. Well, they had a copy of the robot on the, in the display. but we, I think that people can copy the ports, they can laser scan them and stuff.
Right.
Getting the tolerances right is really difficult. And also the code was encrypted. So the secret source was really the behavioral control and knowing how a robot needs to operate to work autonomously in a house. So that's very hard to do.
Got it. So eventually, I guess, it's actually the core technology piece that made it stand out.
Right, and also patent strategy, not just patents, but I think one of the things we did really well was we hired a attorney who specialized in patent law as one of the top executives early on, and not just talking about freedom to operate, right, but when to act. Patents, I'm not going to give legal advice here, but patents are their own thing. So knowing when to act, a win can make a patent stronger. And anyway, I don't want to talk too much legal, but having a good strategist on board was very helpful.
Got it. Key takeaway.
Yeah, I think especially if you're doing anything in the consumer space, right? That's even more so. Certainly, also as well for the industrial use cases. That's super important.
Right. Yeah. And now our reading robot patent just issued yesterday, so we're excited about that. But I've also always been advised by the same attorney, don't talk about patents publicly. So that's enough said.
Got it. Yeah. So Ralph, I have a different question for you. So how did you start in the AGV space? Was it research driven or was it market driven? We know, you were a professor, and then how was basically, what's the rationale that before going into, the warehouse space as compared to other spaces?
Yeah, so I mean, that's the story of the founding of the company. I was, I had started, I'm one of the founders of the systems engineering program at Cornell University when I started there. I ran this large program called RoboCup, which was developing teams of soccer playing robots that would compete in this yearly RoboCup competition, kind of the premier robotics and AI competition. And I was on sabbatical at MIT, and that's when I was hanging out with folks at the Media Lab. And I ran into, through a contact, one of the Kiva founder, Mick Mounts, and it was his idea to use, the market side of it came completely from him. And he was using the videos of our RoboCup soccer robots to try to convince anybody that would listen to him that it was possible to create systems where the robots were intelligent enough, to do something sophisticated. And we hit it off. And along with Pete Werman, who was Mick's friend from MIT days, kind of the three pieces all fit together to create Kiva. So it was a combination of market-driven. It was a combination of Pete was doing a lot of work in auction-based algorithms for resource allocation. He was the one responsible for all the parts of the system that were client-facing, taking the orders, figuring out which robots should fulfill the order. And of course, I was into the robotics, the motion part. How do you create these things? How do they move around all of this mass, and how do they do so without colliding, obstacle avoidance, routing, all this sort of stuff? All of those pieces were necessary.
Got it. Can I see that is because, so the technology first, it's kind of ready because now you can do this sophisticated control. At the same time, then Pete comes, with this market knowledge that he knows, okay, if we do this kind of work in the warehouse, and then that's going to be a very important problem.
Yeah, I don't think it quite works like that. I think it's, it's easy in hindsight to rationalize what happens. I think what happens is that it was a confluence of events where the timing was just right for, both Pete and I were on sabbatical, and Mick had just finished he was at Webvan, one grocery delivery company, and he'd spent 9 months to try to think of what he wanted to do next, and just through contacts, it all came together. It wasn't, it easily could have. There were so many ways in which it could not have happened. I think eventually something like that would have happened, but it happened pretty early. I mean, it was 2002, 2003. We didn't see competitors to what we were doing until really 2015, 2016. Now there's like tons of them, right? They look just like the Kiva robots, right? Their patterns. I was at a conference, and I'm watching these things on the floor, and I'm thinking, like, they copied like everything, even how they move, the little stutter. Like, I was even thinking, are they running our source code? Like, it was just, maybe they were.
And so let's say, in those kind of cases, like, is there a recourse, to basically, let's say, Helen talked about IP, do you think that, let's say, Kiva that covers now Amazon Robotics, since they hold all the IP, do you think they would actually go after, all these like competitions?
So I think I can give my opinion. This is not, I'm not talking about patents, but I would just say, if you're a consumer company, you better have your, Helen nailed it, right? You need to have that very, to know exactly when to go after someone, when to not. I think when you're an industrial company, robotics company, I think you have a long time before that becomes an issue, because the best way is just to stay ahead of everyone. And it's just a different margin type of business, right? So I think it's important to have a patent portfolio. Kiva had a super strong patent portfolio. My current company, we have 80 patents. We're 60 people. We're, half of them have been issued. We have a very strong patent portfolio, even though it's important to have it. But I think it's more of an asset building thing for when you're industrial, as opposed to consumer, where it really needs to be actively pursued and defended.
But I agree that the best way to succeed is to stay ahead of the competition with innovation, which is why I believe that iRobot is continuing to do well. And now 20% of the vacuuming market. That's not 20% of the robot vacuuming market, right? That's 20% of the vacuum market in North America. So that's that's unimaginable from where we started with no one having a robot vacuum.
I think having 20% of any market in the consumer space is difficult.
I think that investors don't like hardware, but I see hardware as also the moat, because even if someone copies you exactly, and even if they had the source code that Raf alluded to, or even if they do all these things, it still takes time to get on the market, right? Because you have to get into production, and you have to have that cycle of engineering prototypes and check them out. And then it's even better if you have them in the field for a while and do iterations. And I think that is the moat that investors should be looking for.
Yeah, I mean, I think investors need to have a portfolio. And I think at the end of the day, investors invest in the people in the company, not just the entrepreneurs, not just the founders, but the whole company, right? And if their passion is doing things with robots that are not just hardware, not just software, but the whole thing, and then that's a bet that should be made. And of course, there's other bets that are pure software only, because those folks are passionate about what it is that they're doing. I don't think there's a right or wrong way to invest. I think having a portfolio is invest. That is why I think if you look at successful robotics companies, I think they have people in them that are super passionate about making robots, not just folks that have business ideas and they go, well, let's build a robot to do that. I don't think that works. I think you need all of it. I think you need those people, and you need the passionate roboticists. I think those are super necessary.
Totally. No, I agree with you. Yeah. So our next question is actually comes to the business model. So, nowadays, right, there's just so many, like, I think there are the majority, like 3 type business model. So in the very, very early days, people buy the hardware and then they might finance it, or maybe they might not. And then after that, nowadays, right, because of the software, like software as a service, so now people actually begin to use robot as a service to basically make it easier to adopt. And then, of course, right, then there's also, customers that are very stubborn, and then you kind of use a combination of hardware and software kind of as business models. So question for you two is, what do you think of these, all these different type of business models? Like, what would be the situations, where one business model would be a better fit? And then,
So first of all, it's not that we didn't want to do it with iRobot. It was razor blades back then, not subscription. But it's the same kind of concept, continually selling to the customer. We had lots of discussions about how we're going to do that, and we even built some prototypes and tried them, but they didn't do the cleaning as well. So we felt the most important thing was that the robot does the job well, especially when you're the first mover in the in the market. So. 18 years later, iRobot just did iRobot Select. They just put that out there. It's a maintenance program. You pay $199 for the robot, like $25 a month. They take care of everything, upgrade you over 3 years, etc. So, it can be done. And, consumers are more in tune with it now. But I think it's in the robot space, it's going to be there will be like a Peloton, Hydro, where the robots allow you to be all you can be, and it'll be a hybrid model where you sell the robot and then have the services on the backside. And I think it's going to be huge.
I think you have to be flexible to what the client wants, right? So with my current company, Verity, we basically, we create, we have autonomous drones that fly indoors. They do things like inspection, data collection, inventory control, and there, the model that clients seem to like, there's different pulls. Like part of it is, it looks better for accounting if there's a capital outlay, right? Taxes are very different when you buy something versus when you do it as a service. That has to be taken into account. So you have to be responsive to the client's needs. The nice thing about doing it as a service, especially with small drones, and I think this is key, is if you're doing large robots as a service, then you got to go and fly people everywhere to go and maintain those things. If there's something wrong, it's as a service maintenance, it's included. You're not going to ship the robot. If the drone is this big, you can put it in a box, mail it to us, right? And then we'll just send you, or you already have spares. And this much easier to do robots as a service when it's small. So, but you have to be responsive to what your client wants, and also in terms of capital. Getting capital now is actually cheap. Companies can issue 10-year bonds for less than 2%. So it may be better for them to actually have capital outlays as opposed to yearly recurring costs. It just really, you have to know who your buyer is and where they are in the company, and you have to be super flexible with your pricing model.
Yeah, actually, I want to kind of dig in a little bit on the, when you see like corporate bonds and debts, like where usually are the, first of all, is at what stage of the company it will be appropriate to actually get on those debt, and then when you can actually issue bonds.
Certainly not as a startup.
I think my opinion is if you're funding inventory, it's okay to get into debt. I wouldn't probably fund a startup with debt.
Right.
No. My point was the client, right? So the clients, they have a choice of either buying your equipment or doing it as a service. Just look at the math. Their cost of capital is so low that it's more efficient for them to buy things than it is to do it as a service. That was my context, right? You have to be responsive to what your client's financial model is, right? And sometimes a capital outlay makes sense. Sometimes doing it as a service makes sense. So you have to be responsive to what your client wants. It wasn't the context of borrowing money as a start.
Got it. So does that mean that let's say if you're let's say if you have a different type of customers, and then some customers, let's say would be better for them using a robotic as service. For some other customers, they would rather to buy. Does that mean that we should actually kind of set up different business models and cater to all these customers?
Certainly, as you start to figure things out, you want to be on this Pareto curve where you're insensitive to it. You don't care if the guy buys it. You don't care if he just leases it. You're just on this Pareto curve and you let them decide. And then that takes a little bit of extra effort because you have slightly different models. But if you set yourself up properly, it's not that difficult to do. And then if you find that everything gravitates towards one, well, then you emphasize that more than others. Doing a startup, if you're doing innovation, you're doing something that hasn't been done before. And a lot of that is the business model. So you should Kiva did a great job. Mick did a phenomenal job of navigating, figuring out what the right business model was for our clients that made them receptive to taking somewhat of a risk, right? But it all turned out for everyone.
Yeah, I think in the consumer space, the hybrid business model where you're selling the hardware, so you're not losing money and financing the customers, because that's a lot of cash. Maybe even if it's at a reduced margin, because you can make up for that with years of revenue for the services.
Absolutely. Like it's the printer model, right? You sell the printer at cost, you lose money on it, and you sell the printer cartridges. Again, it's nice to do when the printer cartridges are so easy to mail back and forth, right?
Yeah. Totally. Yeah. Actually, some of the I would say like successful robotics companies that I have met, I would say they actually have a hybrid model depending on which customer. But then roughly, if you do like a 3-year pay, 3-year total revenue, it's about the same.
That's good. It has to be, right?
Yeah. That's great. Yeah. So another question is actually regarding globalization. So in the sense that, when the company get to a certain size, so you would have to expand beyond the US, and then especially, those, for manufacturing, for example. So how do you actually scale across the globe when you start thinking about that? Like, do you think beforehand, like way before, a few years before, or you grow, as it goes?
I mean, at IRobot, we got distributors in the countries because there's a lot of education to do. There's a lot of, shaking the bushes and stuff that had to be done. Yeah. Give them exclusives and let them make the margin, just like a retailer would make the margin. And that worked for us. We did do some international a little too early for us. And it is, a lot more stuff. Yeah, a lot more rules and regulations. You have to take into account a lot more SKUs because, of languages and other things. So, but if you get a distributor, I would suggest someone who's fully focused on your product. Like big large companies talk a big game about how they'll put all the resources on and stuff. Especially when you're dealing with something new, assuming it's an innovative product, and you're probably going to need somebody who's a little more scrappy and beating the bushes for you in that other country.
I would say that the audience here are startups, right? So unless I would say for most of the folks here, one of the great things about doing things in the US is that it's a monolithic, you don't have to worry about cross-border taxes. That's a big enough market to start off with, right? I think, to become successful for us, it's Europe, right? Like our focus is Europe. We have folks in the US and we're going to expand there, obviously, but make your job easy. The market, if you're going after the right market, it means that it's huge, which means that geographically, if you focus on 1/10 of the globe, it should still be huge, right?
Yeah,
so,
right. But let me just jump in to say that it is true. You don't want to go too early because there's a lot of systems that have to be in place to support it. But you also don't want to go too late because the competition can jump in and get established. And
for consumer stuff, absolutely. Absolutely, for the consumer stuff, absolutely. Yeah.
So another question is actually, like we talk about globalization, but another thing is actually manufacturing. So usually, as in the US, especially in the past, like a few decades, right? A lot of the components has to come from overseas. So in terms of manufacturing, what are the kind of best practices, and in terms of an early stage, and then later on, when you roll out, like, in terms of best practices. Helen, you want to go ahead?
Well, if I think, iRobot's always hired factories, and I think Chinese companies do have a little bit of an advantage when they own the factory, right? Because you're not giving up that margin structure. But I think on balance in the consumer industry, manufacturing overseas for a small company is still the right thing to do. And it was definitely the driver in our case, one of the drivers of success, because we couldn't have put the robot on the market for the cost we did without taking advantage of what being built up in the consumer industry. It's not just about the labor cost, right? It's about the entire supply chain being ready, and about getting components quickly, and about the know-how of making molds. It's the whole package, not just one element.
I think that it's a risk management exercise, right? There's risks to only having local, and there's cost reasons. There's also labor risks. Doing things completely overseas can also be a huge risk if you don't have the visibility and connection. And I don't think there's a right or wrong answer. And I think it really depends on what it is that you're making. I can talk about, for Verity, for example, we do, when you're doing stuff that's high margin, like our live events business, we're using our drones, with Celine Dion and Drake and Metallica, that's a really high margin business, but the stuff is really innovative. The stuff's got to work. So everything we make in Switzerland, right? And it's okay because people are willing to pay for that premium to know when Celine does her encore, she wants to know that the stuff is going to work, and then it lands on her hands that it's going to work, and all, and that's perfectly fine. As that scales, if that scales, then eventually you're going to, start looking for partners to make different things. So it really depends on where you're at and what your margins are. I think that's a big driver of it. Make your job easy. If your margins are large, if you're in a type of business where your margins are large, you have some of that margin to buy yourself the robustness of having really tight control of your supply chain.
Got it. I guess that also depends on, basically the industry. Like for some customers, some industry, they demand high precision. Yeah, got it. So then on the other end is the distribution. So let's say now you have your robots and then manufactured technologies already. So when you kind of distribute to the customers, do you think it's better to actually do it yourself or through distributors? So what are the best practices in situations?
It does depend on the industry. As I said, overseas, at IRobot we use distributors. Recently, I've noticed IRobot's been buying up the distributors. There's a lot you can. I think there's a changing landscape, right? It's been changing for a while, but it's accelerated now. Direct sales but sometimes you want to be in the retails because they get in front of a lot of people, because people can go see the product. But there's the mediums like Amazon, HSN, the folks who are kind of out there selling that can also drive your direct sales. So having a mix, I think, early on is important. You see what works and you do more of that.
That's exactly right. I mean, there's look at Apple, right? They have their own stores for selling their products. That was kind of revolutionary, right? Like this, and it works for them, right? It probably won't work for many others, but I don't think there's a right or wrong answer. I think having partners is a great way to scale, right? If you get things to do, if they're really good at what they're doing, and it falls into their skill set, then that's great. If you have a really sophisticated product, then you probably want to have your own distribution network and really focus on the core markets until you can make it so that it's easier to have your partners. Don't make the mistake of getting partners to sell something that they're just not really capable of selling, maintaining, servicing, answering the right questions.
Got it. So basically, it's you have to evaluate every aspect, and each situation is kind of different.
Absolutely, that's the best advice I would give to any startup.
But just the tools that are available now for any company to use in analytics, and it's no longer just the large companies can evaluate. It's like any company can take it on and target the exact demographic that you're looking for.
Yeah, it's great.
Got it. Yeah. So also on that end, I have another question regarding basic operations. So in the sense that, like now you have robots in the field. So how do you go about maintenance? Like how do you effectively scale that?
Oh, as Raf said, if it's small enough, they send it back. That's kind of what we did with IRobot with the first one, but you got to go a little bit deeper. Modularity is the key, right? Being able to change out components. I remember I was on a support call with Rock Band, the video game. Once, and I never talked to a person, and they had me go through tests, and they pinpointed exactly what was wrong. They sent me a new component. I plugged it in, it worked. I sent them back the other one. I mean, many people don't like that because they want to talk to a person. I'd prefer to talk to an AI to get exactly what I need. And I think there's going to be more and more of that. At IRobot, we had a little different strategy. We had customer support on the line, potential upsell potential. I'd say cost is king, but modularity truly is queen.
Yeah, I mean, I think that's what we're finding with Verity, with our drones. Basically, we provide full, bumper to bumper maintenance that's worry free. That puts the risk on us, but that's good because it forces us to create something that's really robust and reliable. The wonderful thing about drones, there's only 4 moving parts. Like it's mechanically, it's simple.
That's right.
It's there still doesn't mean there's a lot of interesting issues associated with the mechanical design, the vibrate, like there's just a lot of stuff that you wouldn't even think of. But
Wait,
nonetheless,
you're going up. Your Kiva robots only had three moving parts.
exactly, it's right. Even less moving parts, right? But that really was with Kiva too. Like we try to make the design simpler and simpler and simpler mechanically, and put more of the intelligence in the algorithms. I think that's the first thing you should be doing. And in terms of maintaining it, again, if you have the luxury of mailing it, that's the way to go. If you don't, then it really depends. Are you talking about a huge piece of equipment? Then you can fly people out, or is it something that is smaller? Then you need to start setting up a distribution network, or you can create, folks that are regional that can move around. That's what we did at Kiva. So it really depends on the size and your margins too.
I see. So you're seeing that at Kiva. Oh, go ahead, Helen.
Oh, I was just going to say, and as Raf alluded to, we're running like a 90% customer satisfaction rate at Turtle with a 2% return rate. So the best way to deal with it is to build an amazing product that's well engineered for the field.
That's correct. That's the first order thing you should be doing, and the other stuff is important, but the first thing is do that.
Got it. Yeah. So we're at the last 10 minutes, so I want to be able to go through, some of the audience questions. So we have two right here. Yeah. So how can you go about, finding partners that are helpful in scaling, and how do you know if they're the right people?
That's a pretty broad question, because I'm not sure if it's about distribution partners or, building, or even industrial engineers for design. But I'd say that the best way is, if you don't have the expertise yourself, talk to an expert and get their expertise, but also introductions. You can get right to the right person at many of the either retail or places. Right, to go to the exact right buyer is much better, definitely, than making a cold call. But even if you've got a friend who knows someone, right, then you've got to try and get the expertise in to get you to the right spot.
I would say the other is just use common sense. You wouldn't marry someone that you've only gone on one date with, right? So it's a relationship you build. How do you find your right partners? Well, you feel them out, you get introductions, you start small, you go something bigger, and then you formalize the big agreement. You don't start, negotiations. Okay, we want the distribution business for all of this or manufacture. Like, you got to start small and get it's trust, right?
That's great. And and I have another question. Let me just okay. Yeah. So you both talked about how difficult it is to start a successful company in robotics. So what motivated you to actually, dive in and start a company in this space?
Well, I was for IRobot. I was right out of grad school at MIT. So basically, we didn't know any better. Like, we didn't know what we didn't know. So probably a better answer is with the latest company. And I actually didn't start it. I jumped into it as CEO. I had the product working in my home garden. It did a fabulous job. And it probably saved 3 years of the product development side. And now I can take on the value creating and fun side of scaling it up.
Yeah. So basically, that's Churchill, guys. If you don't have one, buy one. If you have a garden.
Yeah, the living robots.
Yeah. So Rafa, what's your comments? Is it because of academic work? Yeah, go ahead.
So the question was, why start a robotics company? Is that what?
Yeah, exactly.
Because given that it's so hard, I think, you do something because you're passionate about it. You don't think about whether it's hard or easy. I think, saying that robotics is hard is in the context of there's a lot of stuff that you have to do to make it work. In that sense, it's hard. And it's hard if you're not embedded in it to come in and say, okay, well, I want to do that, right? It's just like, imagine trying to become a mathematician in your 30s. You're going to say, okay, I really like math. I'm going to get into math. That's going to be hard to do, right? So it's hard in that sense, is that I think most people that are successful in robotics have been doing it for like a big part of their lives. And it's in that respect that it's hard. So I would say that if you've been doing it all your life, it's not hard. If you're just trying to get into it and you have a great business idea, make sure you find the right partners that have been doing it all their life.
Got it. Yeah. So another question is, both of you are actually starting a new company, and like with Helen in Churchill, the Waiting Company, and Raf in Verity, the drone company. And so what actually motivated you to basically, kind of start again and then, basically kind of lead this new startup?
Well, I believe in the product. It's a better way to do the job. It's a way that's very in tune with robot performance. And like Roomba is becoming, and I believe will continue to become, the standard for the home maintenance, the cleaning. Not every job in cleaning, but just the maintenance, vacuuming and sweeping. I think Turtle is going to become the de facto standard for doing weeding. And that's an exciting place for a robot geek like me to be.
Yeah, for me, it's, I mean, I think deep down inside, what drives me, I love the act of creation. You can create a lot when you're in a university environment. I did a lot of theoretical work for my PhD. I love that act of creation. Developing, when I moved to Switzerland, we started the Flying Machine Arena, all these videos of drones building structures and balancing things and throwing them and playing catch, that stuff that comes out of our lab. That's also rewarding, create a lot of PhDs, they go off and to do great things. Then for me then there's the next level, and I like to be all of it. I like to do all of it, right? Just from the right theoretical to commercialization. For Verity in 2014, when we started it, I felt that it was taught that the market opportunity is huge, and I want to be part of that act of creation. It's just exciting. It's exciting to we recently, went live. We were a little bit in stealth mode. We went live with our collaboration with IKEA and DSV at 3PL. With our drones, and it's great. Like, people watch these videos. Oh, it's amazing. They're doing all this stuff indoors, and I can't do that at the university. The only way I can do that is in a company. I couldn't have done what I did at Kiva. Now Amazon Robotics has 250,000 of these mobile robots running around in their warehouse. I couldn't have done that from a university. The only way to do that would have been to start a company.
Yeah, totally. Yeah. So one last question is, so with like Ralph, you moved to Switzerland. So compared to, let's say, US environment and the EU environments, like what actually made the move? For, I think in our in the audience, we actually have both entrepreneurs in the US and also entrepreneurs in the EU.
I mean, I moved here for many, many reasons. It was 2008. Kiva was 5 years old. The part that I was responsible for was well established. I wanted to move back into academia, and I wanted to do research on drones that I had put on hold. I've been working on drones for 20 years. Most people don't know this, but I put all of that on hold to do Kiva. So I came here to start that research, and I was born in Italy. I'm European roots, so it was basically coming home. I love Switzerland. I love the outdoors. ETH Zurich is, one of the best universities in the world. I couldn't see myself in any other place. There's a lot of reasons I came here. Now it's a great place for innovation. There's, Google's largest presence, technical presence outside of, California is here in Switzerland. IBM is a huge presence here. Switzerland's a great place to do innovation, high-tech stuff. It's a great place to live. Every place has its ups and downs. I think the US is a great place to be. 350 million people, one market. What a great place for a startup, right? That's a huge plus, right? Europe has its other advantages, in terms of, labor costs are higher here. So if you're trying to do a play where it's related to, replacing labor, it's easier to do in Europe than it is in the United States. So it really depends.
Got it. So we're coming to 10:45, and then that's the end of the session. So thank you again, thank you so much again. And then, our audience is very active, sending in questions. And then I think if you guys are okay, I think we recorded this, and then we might actually, send it to basically to whoever that is requested, in the audience.
Awesome. Thank you for having us. Yep. Thank you for having us.
Thank you. Nice to see you, Helen. Okay.
Thank you, Rob and Helen. Thank you so much. Yeah.
Okay. Bye-bye.
Bye.